I also asked Brian how investors should think specifically about the valuation of Coinbase relative to the valuation, for example, of Bitcoin, and how correlated he thinks they're going to be.
Over the years, people always ask me, well, should I invest in Coinbase or should I just buy the underlying asset? And I would always tell them, well, first of all, why not do both? Both are great ideas. But I can make the case for why people might want to invest in Coinbase too, which is that we're kind of not only we're not tied to one particular crypto asset. We're adding support for over 100 crypto assets now, and there'll be more and more in the future. And we're also kind of what you might call an indexed bet or a levered bet on the crypto space more broadly, because we're selling picks and shovels. We're helping people access and use this new technology. So I think we're going to grow along with the crypto space, but if we keep growing share, then we'll sort of be an addition of that on top of just the price of crypto, hopefully.
One of the other big questions I think investors have when it comes to valuation is whether they should compare you to a broker or an exchange. Your valuation, by the way, is effectively the same now as the New York Stock Exchange. Or they should think of you as a fintech company, more in line with a PayPal or a Square in terms of multiple. How do you think about it?
Yeah, so this is one of those companies where it's tough to come up with an exact comparable. It's kind of like saying, is Tesla a car company? Well, yes, but it's also kind of a software company, right? Or you could come up with any example. Is Amazon a retailer? Sort of, but it's also a software company. And so, Coinbase it's technology, it's software, it's cybersecurity. It also has aspects of financial services with compliance and legal and various licenses that we've gotten. And so you could say, okay, well, that's finance and technology, that's fintech. And I think there's some truth to that. But it's actually kind of different because most fintech companies are really building, I would say kind of like the UX layer on top of all the same underlying rails, whether that's ACH transfers or SWIFT or wire transfers or credit cards. And so a lot of their services look similar. They can innovate in the UX layer, but they're all the pricing and the speed at which transactions move and everything is kind of similar because it's underneath. We're kind of really, you could think of us as the first fintech that's kind of like vertically integrated. We own the customer relationship all the way down to integrating with the underlying rails themselves. And of course, these are brand new rails, the cryptocurrency blockchains out there that are inherently global. They're cross-border. They're allowing kind of transaction confirmation times to come down. They're allowing fees to come down, at least, when things are working well, and we need to keep scaling blockchains. So building on these new rails is kind of a really cool opportunity to create a new type of company, a crypto company. It's really kind of a new category.
Last year, 96% of Coinbase's revenue was generated through transaction fees, which is an issue that a lot of investors have been focused on. I asked Brian Armstrong about the impact of greater competition over the long term on those fees.
We haven't seen any margin compression yet, and I actually wouldn't expect to see it in the short and the midterm. The reason is that, well, for one thing, crypto is just changing so quickly, and it's actually accelerating in the pace of change, both in terms of number of assets and all the things that people want to do with crypto. So there's no real risk of commoditization happening yet. I guess the other thing is that there's really a custody fee that's sort of baked into the transaction fees, which is a little different than in the traditional brokerage world and things like that. So I don't expect there to be fee compression short and midterm, but longer term, yes, I do think there could be fee compression just like in every other asset class out there. And so what you've seen is in our financials, we've started to invest in different revenue streams that are starting to provide these green shoots of revenue, and things like Coinbase Earn, our Coinbase debit card, staking revenue, ways that people are earning yield on their assets. And we've started to monetize a number of things like this, our custody business for our institutional customers, for instance. So these are providing more steady, predictable streams of revenue. And my guess is that in 5 or 10 years, you'll see that be maybe even as 50% or more of our revenue.
Shepard Smith here. Thanks for watching CNBC on YouTube.